Lesson 1, Understanding and Managing Risks. Lesson outline: Risk management, role of insurance in risk management, perils, nature, risk analysis, risk planning, risk control, mechanism for transfer of risk, insurance and reinsurance. Learning objectives. We live in a risky world, forces that threaten our financial well being constantly surround us and are largely outside our control. Some people experience the premature and tragic death of a beloved family member, loss or destruction of their property from both man-made and natural disasters. There is other group of people. There is no accident but are exposed to the traumatic effects of a liability lawsuit. The purpose of this chapter is to enable to students to understand meaning and classification of different types of risks, meaning of perils and hazards. What is risk? Risk is part of every human endeavor. From the moment we get up in the morning, drive, or take public transportation to get to school or to work until we get back into our beds, and perhaps even afterwards, we are exposed to risks of different degrees. What makes the study of risk fascinating is that while some of this risk bearing may not be completely voluntary, we seek out some risks on our own, speeding on the highways or gambling, for instance, and enjoy them. While some of these risks may seem trivial, others make a significant difference in the way we live our lives. On a loftier note, it can be argued that every major advance in human civilization, from the caveman's invention of tools to gene therapy, has been made possible because someone was willing to take a risk and challenge the status quo. Risk is the potential of loss, an undesirable outcome, however, not necessarily so, resulting from a given action, activity, and or inaction. The notion implies that a choice having an influence on the outcome sometimes exists or existed. Potential losses themselves may also be called risks. Any human endeavor carries some risk, but some are much riskier than others. Risk can be defined in seven different ways. Number one, the probability of something happening multiplied by the resulting cost or benefit if it does. Number two, the probability or threat of quantifiable damage, injury, liability, loss, or any other negative occurrence that is caused by external or internal vulnerabilities and that may be avoided through preemptive action. Uncertainty. Uncertainty is at the very core of the concept of risk itself. It is uncertainty about the outcome in a given situation. Uncertainty does not exist in the natural order of things, though there are a number of outcomes which are uncertain. For example, the weather for the test match, the possibility of being made redundant, the risk of having an accident. There is surely uncertainty surrounding all of these events. In 1921, Frank Knight summarized the difference between risk and uncertainty. Thus, uncertainty must be taken in a sense radically distinct from the familiar notion of risk, from which It has never been properly separated. The essential fact is that risk means, in some cases, a quantity sus- susceptible of measurement, while at the other times it is something distinctly not of this character. And there are far reaching and crucial differences in the bearing of the phenomena depending on which of the two is really present and operating.